everybody. Channel member Rob, channel member Dan, channel member Ryan, channel member Sergio, channel member Ted, channel member Don, channel member Ivan, channel member Arturo, channel member Don. Again, good morning, everybody. And Kimberly is in the room. And welcome. She comes streaking through. Everybody close your eyes. Anyway. Anyway, good morning, everybody. And the market is kind of like in this position, right? Like we moved up after FOMC. We got the China, whatever you want to call it, news on their extreme levels of, I don't know, panic. It seems like it's almost like a panic because, well, I mean, you don't just go reducing people's mortgages for existing mortgages without there being some sort of problem that you're trying to quell. So is China panicking? I don't know. What's the market's next move? Did we anticipate the China stimulus and that's why we popped so big? I don't know. You tell me. And we are sitting up here kind of at all-time highs on the S&P, not quite all-time highs on the NASDAQ, and certainly not near all-time highs on the Russell. But I don't know. What's the market's next move? We're very, very close to the target. If we look at the chart right here, very close to that target. Just kind of scraping the bottom of the zone that could be conceived as being the target. But, the 1272 is the real target. This 1.1448, 90% of the way there is just the conservative target I like to use. We'll see. We'll see. Yesterday, not a horrible day, but not the warm and fuzzy. Not the warm and fuzzy. We could do a pullback, so that is in the cards still here today. And remember, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, which includes don't buy stuff from me unless you trust me. All right, so it's don't buy stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. There's substantial risk of loss. Make sure you have an edge. Make sure you know what you're doing. Make sure you have a plan. If you don't have a plan, don't trade. And if you don't know what all that means, and you need somebody just to tell you what to do, you're going to have to hire a financial advisor and consult them. It's not what I do. I don't tell people how to trade, what to trade, when to trade. I don't. I do show off what I'm doing, and you can ride along, but you got to make your own decisions. All right. I build cool stuff for traders. Many of you know that and love it, but some of you don't quite understand that you got to make your own trading decisions. You got to have your own plan. So please be careful. If you're new to any system, paper trade it. Get a few wins under your belt before you go after it with real money, because you're probably going to lose if you're doing something new. All right. Don't do new stuff in the market with real live money unless it's money that you can just take out back, throw in the fire pit and light it on fire, because you're likely to make mistakes. I made mistakes. That's how I took a big loss in August on the big downturn. I was trying out something new, had more risk than, I thought the risk was controlled. And turns out we do a big drop and they liquidate you pre-market. You take a bigger loss than you meant to. And, still aggravating me. Something that shouldn't have gotten out of control got booked as a loss out of my control. Anyway, bad things can happen. Anyway, consumer confidence coming out at 10 o'clock today. No, that's yesterday. Dun, 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 dun. Refresh. 10 o'clock yesterday. Right there, consumer confidence. I think that it's kind of funny. I was on with a particular guru yesterday. It was like, oh, the market didn't react for like an hour after it opened. I think it was reacting to that, not to China news. Anyway, moving on. Today, new home sales, crude oil inventories, right there. That's Wednesday. Tomorrow, we get some final GDP and unemployment claims, core durable goods, final blah, 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 blah. I'm not sure it's going to be a market mover. Not sure. It's kind of benign. It could be, but so that is coming out tomorrow right there. Be cautious. So I don't know. It may move the market, but it's not really been historically a big market mover. And then on Friday, This one's one to watch out for, but I don't think they're gonna. I think they're gonna keep it in line right here. We don't get the year over year. We get the month over month on here. I think it's gonna come in line. Now, there's the possibility it comes in a little spicy. Housing costs are going up. It's kind of like the side effect of reducing mortgage rates or mortgage rates dropping. More people want to buy a house. Prices go up. That directly reflects into PCE and CPI. I don't know. If energy prices suddenly get sparky, I think we could see these things rock and roll the inflation. Inflation could rip back very quickly. I think it's just a matter of time there. So keep an eye out on that stuff. All this stuff I talk about right here, this is all economic news, right? This is all economic news. It's not really like, even though we like to kind of try and correlate it to the stock market is completely independent from the economy. People don't like, it's very hard for people to decouple that in their brain, but the stock market's the stock market. It moves. It's kind of like a legalized casino almost that has patterns and, trillions of dollars tied up into it. It's the capital markets and there's lots of games that get played. The economy doesn't really have games that get played, right? That's kind of like humming along and we all participate in it one way or another, right? You can't, there's virtually nothing you can do that in life that doesn't participate in the economy some way, somehow. And, just the fact you flip on the lights, you're using electricity, it goes into the economy. I mean, even if you live off grid, you bought stuff, you have things that were made somewhere else. That's, participating in the economy. You drive a car back to town, whatever, using fuel's in the, oil's in the economy. I mean, it's like the vehicle itself, all the parts, all the things, there's virtually nothing you can do in this life that doesn't participate in the economy. That's separate from the stock market, though. All right. Even though loosely tied together, because a lot of the companies that run the economy participate in the stock market. So don't get it confused. All right. When you see mainstream media pundits and all this, this blah, 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 it's going to affect the market. Not necessarily. Not necessarily. A lot of people say the market is a forward-looking instrument. I think it's a right now instrument. All right. Prices are priced right now. Right. It's what somebody's willing to pay right now. It's not what somebody's willing to pay in 6 months. We do have kind of instruments for that, but those instruments represent right now. It's always right now. It's kind of like just-in-time manufacturing on the stock market. Everything's just-in-time prices. Now, look at what we did overnight. There was a close and the reopen, dipped down, hit the roadmap line yet again, kind of a three-way fashion. We've been having a lot of trouble breaking out this high. A lot of trouble. This is ES. If you've never seen this before, this is S&P 500 futures. Why am I looking at the futures? Because the cash index doesn't trade overnight. There's no overnight data here. Stop trading at 4 p.m. Eastern time. Won't trade again for 5 minutes. Start trading again. And right now, we're looking at a flat open. ES did pretty much nothing. We had 6 p.m. right over here. Here we are. Well, that's actually 10 minutes ago. It's 10 minutes delayed data because I don't pay for live data on here. But we go back over here and we look at the 6 p.m. or the 4 p.m. close. Right. I guess 5 p.m. close right over here. And guess what? We're pretty much flat. Pretty much flat. And there it was right there. That's the close. Here's the reopen. We kind of touch. We're a little bit higher. A little bit lower. And we're just stuck in the middle right there. Indecision. No real compelling anything in the market. So if this is a bounce on the 15 minutes, can we break out or do we just hit our head on that all-time high? I don't know. kind of the same game we had yesterday. We've got this level up here, and we have this level down here that I've still got marked. We break out, probably going on up, and that upside isn't giant. Not giant. And if we go down, well, the downside's a little bigger. And we got a long way to go to get down to it too. So downside risk is bigger than upside potential. But be careful. This can do a blow off and just go ripping higher for seemingly no reason. Is the excuse the news tomorrow? GDP? Core durable goods? Is it Powell speaking tomorrow? I don't know, 9:20? Right when just moments after I go live, Powell's getting on. Is it PCE on Friday? Makes us rip or dump. Then we have consumer sentiment. We get this almost every week. We get these revised and preliminary consumer sentiment numbers almost every week. Those do kind of move the market a little bit sometimes. Depends on if it's a surprise or not. So we've been sitting here. Thursday, we came up here just digesting for a week now. For a week. FOMC was a week ago at this point. We had a nice fat move up, and then we've just been digesting it. Right? We did this crazy... Yeah, that kind of showed you the instability. This right here. This showed you the instability that we had. That was on the FOMC right there. And then overnight, they took it higher. We opened up, a little instability, and then pushed it up to where we are now. And then we've just been digesting it for a week. Just sitting here. Not really going higher, not really going lower. Just churning. Slight drift higher. After we pulled back a little bit, we've just been drifting higher a little bit. So really, if you look at the first move there, that target's right up in there. All we do is move to the target off of this. We've set the stage for it. Let's turn on my numbers. Yeah, 71.8% of the time we go higher. So just something to keep an eye on. That's what do I expect today? We'll get into that at the end. Stick around. And I have a really, really sweet bonus trade. Speaking of which, bonus trades. All the way back in August 20th, I mentioned this trade right here. Anybody remember? XLY. It closed out yesterday. Beautiful trade. I made more than a double. Right there on my January options that I played. We talked about it on the 20th. Right there. Gave you plenty of time. You could have even gotten in lower than me. And then we went ripping off right to the target. Right there. The trade's done for me. And there's the market opening. I got out. I have no more exposure to this. That was the high probability move. You may be like, well, how high probability was it? Look at this. Look at the numbers. Right down here. It's kind of behind my head a little bit. Let me see if I can pull them up. And I'm getting all sorts of alerts popping up, of course. And pull it up here above my head. There you go. 24 trades, 91.67%. Profit factor 19. 53 bars on average. This one took 30-ish. Wasn't a bad shake. Wasn't a bad shake. So hopefully you got into that. I took that one on the 20th. I don't take them all, but I took that one because of how high probability it was. All right, when they're smoking hot. And the one today, maybe even better than this one. The one kicking off. I may actually get into it. We'll see. We'll talk about it. So stick around. Stick around to the end. And, if anything I say along the way, you like it, make sure you give me a thumbs up on the video or just interact with the video. Helps YouTube know that this is content that people like. So anyway, in queue, pushing higher than the high we had here. This is kind of confirming that we may actually do an extension. That target, even though I've talked about lots of targets, just simplify, keep it stupidly simple here. Golly, alerts like galore. Keep it stupidly simple. 21.5 would be the target based on what we've got. 21.5. The entry was all the way over here. We did do a retrace, sets it up, sets the stage. 21.5 right there. Just waiting. RTY, same situation. We've got an entry back here. Right? All the things I've talked about. All the things. But keep it stupidly simple. The target right there, 23.70. If we're going to do it. Now, this looks like we could roll. And based on the 3-wave up, gives me a little bit of heartburn that we might not complete the pattern. But wouldn't surprise me one bit. This is a higher probability setup. Right here, look, 88.89%. So 89% of the time. It's only 9 trades, but 89% of the time we go up and tag that level once the price pattern set up. Wouldn't surprise me one bit to go up there. Oil, different story here. Got the resistance. I've talked about this for a few days now. This big candle that dropped out of the uptrend of lows, we've got to beat that candle. And right now, that's 1 day, 2 day, 3 day, 4 day, 5 days, 6 days, 7 days, 8 days, 9 days. 9 days we've been working on it. The longer we sit here, the higher the likelihood we're going to make a lower low. Lower than this. If we just sit here, we're winding it up, but usually it does a knee jerk before it can bust through. It's like, and then bust through. So we're consolidating. 9 days, 9 trading days. This is starting to be what I expect to happen. Now, it can, like anything's possible. It can just, get a wild hair and just go ripping. But the longer we sit there like that, the more it gives me the feeling we're going to, see over here? Look at this one. Sat there, pull back, push through. But then we couldn't hold it and went down. These ones, and then other one like this one, consolidate, and then we pop through. So it can happen both ways. Look how many days that took to work through that zone right there. And then we popped, ran out of steam, and dropped. And then right back to the same zone. You see that right there? Ugh. So we're hanging out here. We could hang out here indefinitely. Just churn it right in there. Churn. Doesn't have to do anything. Gold, hitting all sorts of alerts overnight. Keep extending. This thing could go on a mega run here. Could go on a mega run. Silver still lagging. I still want to see silver catch up. And I don't know what just happened. SI1. Why did it grab ruble? That was so weird. Silver, while it's catching up, we haven't broken out yet. We still have a large potential upside to go. But look at that. I've been talking about it. I've been excited about it. Let's get her at her. Let's go. Let's get to the extensions. 33.75, first stop. But as I talked about yesterday, let's go over here. It's gonna be stupid, huh? Don't pull up the ruble. Why would you pull up the ruble? It makes no sense. This right here would pop up. Check this out. This big correction right here. Roadmap bounce, monthly chart. If we get above that 35.80 level, get a monthly close up there, sets up these much higher levels. Potentially 54, 59. Maybe even we've already got the close if it's on the log mode. We're talking about 60, 72, 120. Holy moly. That could be a mega rally in silver. Part of the reason why I'm so excited about the potential in silver. Yeah, I don't necessarily tell all the things just in case, but that one looks pretty spicy. Looking forward. Bitcoin still stuck in the zone. Cannot get through. Yesterday was looking good, but nope. Rejecting it, taking it right back today so far. Ugh. Twin towers. I don't like that. That kind of like, it's a little baby. A friend of mine calls it twin towers. It's when you have a green one and a red one that's the same exact, it usually results in a bigger retrace. So we need this to not end up exactly the same like the green one today. If it does, probably coming back down here again. That's the warning right there on Bitcoin. Ethereum, yeah, just not showing any enthusiasm, not up to resistance, not, just not doing the things. DXY, solidly below support, and probably going to go test this support down here. So those of you that say everything's correlated to the dollar, well, look at that. Dollar pushing lower and not really seeing much action anywhere else. So NKD rallying a little bit. Is that the sign that the U.S. market's going to go? I don't know. We kind of back tested the roadmap line, pushing up. Little baby roadmap bounce, but that only puts us up into this resistance. If we ran the fibs on it, little baby move. Yeah, just right up into the resistance there. We're going to have to get above that resistance to go higher. Like that's the, that's period. Got to get through it. That's the overhead. Now support is the roadmap line, but then that, and then we break down and we could go lower, in fact. So we could be on a path to go mega higher, but one thing at a time. We're stuck in this little zone. There's intermediate support at 37. Here's resistance up here at 39. That goes higher. Probably take the U.S. markets higher. All right, gainers. There's not much on the list today. Now I can go pull all the things that are gaining $2 or more, all the things declining $2 or more, build the list in the pre-market before I come live. I don't get to update it because I'm live. So if things changed in these stocks since the time I built the list, I don't know. It's not a request show, just so you know. That was last night, 30 minutes of awesome. And thanks for those that came out last night. ARGX right here, pharmaceutical, biotech. Or if you're new here, welcome to the conversation. There's 4 things that commonly don't hold the patterns. Biotech, pharma doesn't hold the patterns. It just does wild hair stuff, unreliable. And it's basically anything the Food and Drug Administration of the United States, FDA, gets involved in. They just announce things, and these things take a wild turn. Now, this one, high price stuff, might work out. It's got the setup, 592, but it can take a wild turn. Take a left turn at Albuquerque with Bugs Bunny and Daffy Duck. Flutter Entertainment has been rocking and rolling. It's up through the target. I don't see a high probability setup until we get a retrace, but it may extend it on up to 265. That would be the max I would expect before we see another retrace. DoorDash, that one's rocking and rolling. Rocking and rolling. Let's see, let's just clear everything off of here. Make it simple. That high, this low, that target, 151, possibly 158. If we get really spicy, 179 right there. Things can get spicy to the upside, and things can get spicy to the downside. All right. CTAS, CentOS. So that's a regular split. Yeah, regular splits. Brought it down from 800 to 200. And we're just hanging. Nothing I can really do on that chart. That's looking like a crazy bubble type pattern. These guys do uniforms and stuff. Other consumer services. Absolutely wild. That's probably going to retrace at some points. It's not really the bubble pattern. We're not going exponential yet. It's just, it's going up at a speed, and we're starting to get a little, starting to arc up a little bit. If we actually do a vertical, it may come back down. But this looks like a solid stock right now. Progressive. Hey, Sledge, good morning. Ted, good morning. Channel member Ted, channel member Sledge. And Progressive. Trying to break out here. This was a bigger picture. 3-wave move. Right up to the target. You missed it. Well, you missed it. That fired off already. Pretty much to the target. Where's the opportunity? Not much left there. Be careful. Look at the weekly chart. That was a weekly bounce. Right up in there. Give you the opportunity to get in all the way back here in January. Give you another opportunity right here in July. Now here we are, right up near the target, 66 upside. Watch out. It could go to 73, but remember the fib ladder gets lower and lower probability. 1272, 70% likely. This one drops all the way down to like 35 to 40%. This one drops even lower. And we get all the way up to 686 up here. It's less than 1% likely that we just hit those targets without any type of retrace. Only 1% of stuff is going to go all the way up here without doing that. Be careful. The vast majority of the time we see resistance here. We see a retrace to the roadmap line. Then we see another extension, another extension, another extension. I mean, that's just the pattern the market usually runs on. So be careful. That's the pattern we traded on XLY. NVO, it's on the poppers list. This has been on the decliners list for a while. And it may be, if we break down below this low, we may be heading for the weekly roadmap line here. The daily, definitely looking a little soft here. Poking below it, holding the higher low so far. So far, we may need to retrace a little deeper. Like I said, we may need to go visit the weekly roadmap line. This thing's been a monster. This one's been a monster mover. With the GLP-1 drugs, looks kind of like the Centos chart, right? Holy moly. And its partner in crime. These are biotech pharma. Eli Lilly. Look at that baby go. Crazy move. GLP-1 drugs. Changing the world here. See, we're sitting right at this 2618. Could we climb on higher? Yeah, we got the 3618. 4236. That's 686 up here at ridiculous numbers, 351,000. Holy moly. Holy moly. Finding resistance, though. Do kind of expect one more pop on Lilly. NVO, looks like we're doing a retrace on NVO. DKNG. Look at here. Yeah, it was on the poppers list. Now it's kind of taking it back a little bit here after the open. If we can get a daily close up in this zone, potential for this to rally up to 53.50 right there. Not too shabby. NOW. Hey, Chris. Good to see you, channel member Chris. As always. And now looks kind of played out. I would expect this to retrace back to the roadmap line. That was played out for me back here. We kept chugging. We did this retrace right here. And we tagged it right here. We did the retrace. It was pretty deep, back down to the 618, and then we got that energy. Took a little bit to get through this zone right here. Then we popped it right up to the 1618. Now retracing again. And I kind of expect it to come back in here. That's what I expect it to do. I'm not going to trade for it. It's not high probability. If it does, it sets up another trade again. But for now, it's just not on my radar. SAP, we're going to get the US version, not the German version. This thing's being grabbing all sorts of international things today. And it's just kind of played out. Like, that's way up there in the stratosphere. I just don't have any high conviction, compelling things to do with Stocks that are sitting there at ridiculous levels. That's just not what I chase in the market. If that's your bag, great. It's not my bag, baby. So it's not what I go after. And KBH, KB Home. On the droppers list, that's just kind of chopping. I do expect that to retrace. It hasn't actually hit the roadmap line on the daily since back here in November. Back here in November. You can see we get the extension, we retrace, we go on another extension, we retrace, missed. So that was on the lower time frame at the 4 hour. 4 hour, missed on the 4 hour right there. Oh, maybe. Yeah, missed, just missed. I can see some white, just missed. This one may retrace again to the 4 hour and go on another extension. Daily is usually where I hang out though. FNGU found significant resistance there. It's got to get through that to break on out and go higher. This is microsector fangs. We're seeing, when you go through the fang stuff, like Microsoft not really participating in the move higher. Apple not really participating in that move higher yet. Amazon not really. While it's looking a little better than some of them, it's just not getting out there. It's not making new highs. Netflix, that is. Meta, it is. Google, this one might be the worst one. Look at that. Ugh. Ugh. And maybe you say, well, it's not Netflix, it's Nvidia. Cool. That one's not making new highs either. So, FNGU, just messing around here. Messing around. Google, Microsoft, Apple need to get going and to take this higher. Yen, the yen and the yang yesterday, we tried to break out, gapping down today. Not looking very strong for continuation higher. YANG. Here's the yang. Made new lows. Did we get down to support? Is the roadmap bounce upside down? We did. So this could be support, and we bounce higher here on yang, which would take yen down. Yen didn't make it out to the extension. Why? It's kind of a declining asset. See the reverse split back here? This thing has costs to keeping that 3x leverage going. It eats it alive over the long term. We weren't able to push this up higher like the yang. Went down, got that downside. And look, even though China's been beat down, this thing's still declining on the big picture. Even though, look at something like BABA, it's been down, right? You would think BABA's down, yang should be like sky high, but it's not. It's not the way it works. Yang down over the long trend. Be careful chasing those leverage instruments. Leverage is one of those things that doesn't always play out. TCOM got the entry on the daily. Trip.com sets this baby up. This was not my play, but play of the day. But here you go, right here. Potential for this to go up to the 61 area 89% of the time, maybe. This is not the bonus trade. The bonus trade is smoking hot today, though. Coming up here in a minute. Baidu, resistance. That was 3 waves up. Be careful. 1, 2, 3. Moves in threes are corrective. Till we prove otherwise. We gotta get above the roadmap line up into the 1618 to kind of tip the odds that this is a new move and not just a correction off the downtrend, and we're gonna get continuation lower. Right now, if we hold this, I expect this. Be careful. BNZI. Well, that looks nasty. That looks nasty. Dumpster fire. Reverse split. 50 for 1. So you had 200 shares, a month ago. Now you got 4. Ouch. You had 100 shares. Now you got 2. Ugh. I wouldn't trade that with your money. I wouldn't trade it with money that somebody told me to just go burn. PDD could be a bottom here. This is Temu, but we do have this large gap down here. It doesn't give me warm fuzzies. So It may work out, but at the same time, the 618 is all the way up here. Rub up line, significant resistance, 618, and that gap down, all sitting in there and standing in between where we are now and the target up at 180 if it's going to get there. So once we get above this zone, I would expect that. But this is significant resistance in here. Significant resistance in this zone. Be careful. All right, CWB, China Internet Index 2X Bulls, rejected right off of the 618. Like, you think this stuff's magic. Look at that. Look at that. Didn't get through it. Still a downward bias. Their stimulus may fail. That's kind of the red light there. If we can get continuation higher, great. But this is the caution light right here. Caution, caution. We might go down, make a lower low. OKTA, farting around the box. Still expect that to go on down and get lower. FUTU. It's on a path. Potential to rally out to 87. Maybe. TH bouncing off the roadmap line from the downside. I go through the decliners to try to find stuff that looks like it may turn around. Not happening today so far. This looks like it may get extension down to $5. Low price stuff, another one of those things. Like, if I said there were 4 things. Number 1 is the biotech, pharma. Number 2, leverage stuff. If you couldn't tell. Number 3, low price stuff. Stuff $10 or lower. Doesn't always follow patterns. So, and that's stocks under $10. Doesn't really count futures or cryptos or anything like that. Just stocks. And the 4th thing, maybe like, well, JT, what's the 4th thing? 4th thing, right? China stuff. Imagine that, right? China stuff. So we got biotech, pharma, leverage stuff, low price stuff, China stuff. And there's other things that don't always work out, like real estate investment trusts and SPACs and edge case stuff that doesn't show up very much. But those 4 things show up all the time on the list here, and don't always follow patterns. So watch for this to turn here. But if we get much lower, we're probably setting the stage to go even lower on TH. MSTR. This is a leveraged Bitcoin play, even if you don't look at it that way, and it's firing off an entry. Funny enough, look at this. Firing off the entry here. Sets the stage. We're going to rally on up. The target's going to be up here at 199. Maybe 220 above that. So right in that zone, right where the arrow is. This is kicking off a potential entry. If you don't have exposure, I do have like 10 shares that I'm sitting on. It acts like leveraged Bitcoin, even though it's not even Bitcoin. Like, it's a company, but they hold significant amounts of Bitcoin on their balance sheet. They keep selling shares and raising funds to buy more Bitcoin and hold it on their balance sheet. So it trades like leveraged Bitcoin, interestingly enough. EXPE, that one just hit the target. There was the entry all the way back to here. And congratulations if anybody took it. And for the bigger pullback there, still got an upside target, 167. This is just this one that fired off right here. Fired off right there. Closed above the 618 and got at the target right there at 146. Let's look at the bigger picture. The weekly chart. Bounce here. There's the entry now. Target 167. It's funny how the daily chart's getting out and the weekly chart getting in. GPN. Ooh, rejection of the roadmap line. Trying to go higher, and that's probably going lower. Probably going lower. Couldn't do it. Couldn't do it. 85. Looks like the downside target. GM coming back to the roadmap line. Had the entry right back there. So far, nothing. Has not gotten the target at 52. And the bonus trade for today, thanks for sticking around. For those of you that did, Copart. Check this baby out. Check this baby out. Look at this. 23 trades. Now, normally I would be like, well, it's, not taking a loser, so it's maybe likely to take one. But look at this. Look at these numbers. 23 trades. That's getting dang close to statistically significant. 100% of the time, it always wins. Right there. 23 trades. And that's since all the way back in 1994. Wow. Wow. That is pretty smoking, if you ask me. Now, it's not the, what's the profit factor? We don't know. It has no losses, right? There's no ratio to losses if it has no losses. So, you're like, all right, what's the trade, JT? Give us the juice. All right. You asked for it. You asked for it. Here we go. Paste it in here. So, new potential entry, 5503 target. Right here, 5503 target. Stop below 4705. Not a huge risk even. 258 upside with a 100% win rate in the history, which makes the profit factor infinity. That's why it says negative. 77 trading days on average. 23 trades since 1994. That's a smoking hot trade right there. So there was the high. There's the low. Here's the entry right there. Right there. And we're looking for the target right up here at 5503. 5503. That's a pretty smoking one right there. So you may be like, well, what does that look like on the actual chart? Dun, 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 dun. That's what we're going to do right here. So it's this high right here, this low right here. You may be like, why don't you use the other ones? Because we don't, all right? Right there's the trigger. Here's the entry today. 5503 is the real number. My fib lines aren't snapped onto the candles. Like you can see, that changes the numbers drastically. I don't snap them on because it annoys me. It always snaps on the wrong thing. So there you go. 5503 upside, 4705 stop. Now, could this be the first one it fails? Absolutely. And this isn't a fast mover. So 77 trading days on average. This could take a little while to work out. 77. I'm going to have to zoom it out. Excuse me. 77 days. Puts us out here. 77 bars. It's 112 days. So we're looking at January if you were playing options. I don't know that options are a great option for this one. You might want to play in shares. But $2 upside. Not too shabby. Not too shabby. There you go. High probability setup. Now, it could kick off the bigger picture weekly setup. But we didn't hit, so it's not the weekly. Right? Didn't touch on the 3-day. It's not that one either. We do have a downtrend of highs cooking. That could be headwinds to getting up to the target. So just with the good comes the bad. I'd be remiss if I didn't warn. There you go. So we do have this downtrend cooking. Those high, downtrend of highs. Gonna have to break through it to get to the target. Target. So that high, this low. You could go for the 60 upside, but I would definitely be locking in your profit at 55 if you take this now. All right. There you go. Smoking hot trade. Smoking hot trade. All right, bias for the day. Thanks for hanging out, everybody. And bias for the day. I kind of expect us to keep drifting higher. Maybe we drift on up and touch that target up there. Maybe. We're trying. We're trying. Ooh, new high. Look at that little spike to new high right there. We're setting the bias to going up. NQ really wants to break out and go. Can we do it? Can we do it? My bias is looking up, but I'm still cautious. If things start turning around on me, I'm going to be ready to flip-flop on the market. Right up there's the target. Right there, that 5,800 on ES. Be this 5780 area. 5770, I guess, on SPX. 5760, 5770, 5840 is the 1272. Let's goose it, baby. Let's get there. Let's get the target. All right. Thanks for coming, everybody. I'll see you around. Be back. Same bat time, same bat channel. Tomorrow morning, 9:15. We'll go through it again. Find out what's popping, what's dropping. Go all through the markets.